The U.S. government shuts down for 3 days, but did it matter to your portfolio? Should it matter to you? Hundreds of U.S. corporations give bonuses and raises to their employees. What's next for the tax reform law? And the small cap Dow and S&P weaken within the leading quadrant on the World Index Relative Rotation Graph. Caution! What's in your portfolio? If you don't know, you should. If you want to know, we can help. Here's what's moving the markets and your money. I'm Charles Brown, and it's Wednesday, January 24th, and this is CB3 on 3. CB3 on 3 analyzes political, fundamental, and technical influences on market behavior, which thus affects your money. Together, these influences determine the movements in all the portfolios we manage. Here's what we're seeing this week. In political influences, more than 48 hours after the 69-hour weekend government shutdown, party leaders and members of Congress continue to be red hot and assign blame. Who won the shutdown is mostly irrelevant to the weeks ahead, but the debate itself highlights the most fundamental problems in American politics. As investors, we remained completely unfazed. The federal government shut down for 3 days. How did Wall Street react? With a big yawn and a shoulder shrug and a new lifetime high. This was the 18th government shutdown since 1976. Not necessarily routine, but also not uncharted territory either. Do you want to take a guess what the market did during the previous 17 shutdowns? A whole lot of nothing, or new market highs were hit. Here's my take on the political implications for our investments. As your portfolio manager looking out for our investors, I would prefer to see Congress stop these continuing resolutions, also known as CRs, and at least agree on a one-year budgeting deal so that we can all get back to observing and trading on fourth quarter earnings. And we want to get going on what I mentioned in last week's broadcast as our number one priority for 2018, infrastructure spending, which is the best way we can improve this economy. President Trump has just announced when he returns from Davos that he will be rolling out his new infrastructure spending bill. In fundamental influences, the stock market is on a winning streak not seen since 1959. My take on this is that it's primarily due to the tax reform law, as hundreds of U.S. corporations give back to their employees. Nearly every day, another company publicly announces bonuses, wage increases, or other kinds of benefits they're offering their employees. Donald Trump signed this tax reform into law on December 22nd, and look what's happened since then. Giant firms like Walmart, tech giants like Apple, and the telco company Verizon are among the latest to claim that they're reinvesting capital into their workforce because of the lower corporate tax rate. The timing of these announcements indicates how corporations are trying to cozy up to President Trump, in my opinion. Here's my take on the fundamental implications for our investments. If you look at this scrolling list behind me, you'll see a comprehensive list of companies and what they're offering employees after the Tax Reform Act was signed into law by President Trump. Industries ranging from airlines to zoos are promising everything from $1,000 bonuses to planting more vineyards to hiring more employees, totaling an estimated 2.5 million employees that will be affected by these benefits. Apple alone has stated that they'll be investing $350 billion in employees and buildings in the Silicon Valley over the next 5 years. Folks, this is U.S. prosperity in motion. This is making America great again. In technical influences, the World Relative Rotation Graph is beginning to show some weakening momentum in the U.S. markets. The S&P 500, the Dow, and the Russell Small Cap, relative to the NASDAQ Technology Quadrant, remains the best performer in the leading quadrant. Virtually no stock market boom has ever occurred over the long term without small cap stock participation. Seeing the Dow and S&P weaken is concerning me a little bit relative to the developed markets. And I'm watching this trend very carefully as we are now near the end of January, historically one of the strongest months of the year for stock market performance. And that's CB3 on 3 for Wednesday, January 24th. What's in your portfolio? If you don't know, you should. If you want to know, we can help. I'm Charles Brown, and at CB3 Financial Group, we don't just manage your assets, we become one of them.